Again, welcome for joining. To all of those who are joining from all over the world, thank you for being part of this webinar. So the layout of the agenda for this webinar, I will start by giving a short introduction. This webinar is a prelude to the solar project development and finance tour that we will be holding in Mexico City from the 9th to the 13th of March. And we will be further exploring some of the opportunities that we see in the Mexico's market, by some considered to be Latin America's most attractive PV market. During the course of this webinar, we will try to find out, why some analysts consider this to be the case. So our three speakers will be, firstly, Pedro Helio, who is a advisor to Asolmex, as well as the country manager of First Solar. He will be speaking for 15 minutes, after which I will pass the floor to Marco Antonio Nieto Vázquez, who is an energy specialist with Baker & McKenzie, a leading law firm, who will be talking about the energy reform and some legal issues. And finally, our third speaker will be Stefan Bloom from DG Invest, who will be giving an overview of the finance and investment opportunities in the Mexican sector and explaining how you can finance your solar projects. And finally, we will have about 10 minutes of discussion time. So a few practical remarks. Recordings and slides of this webinar will be made available. So after this presentation, you will be able to have these available to you. If you have any questions, you'll see on the right of your screen there is a chat box. So feel free to direct any of your questions to speakers to the chat box. As I mentioned, the question and answer period will be at the end of the presentation, but here we will be sorting through questions. We do have quite a large number of attendees, so we probably won't have a chance to answer all questions during this webinar, but I will be happy to follow up with you and direct your questions to the speakers for those of you that don't have your questions answered. And also, if you have any technical issues, we do have a support team available to us. So again, if you have any technical issues, please use the chat box in order to say what those are. So just to tell you about Solarplaza, so my name is Borja Gutierrez, and I'm a project manager for our solar project development and finance tour in Mexico. Solarplaza was founded in 2004 and is a solar PV focused global information platform. Our mission is to empower professionals in the solar business development by building the most valuable solar PV network. One of our main specializations are conferences and trade missions, of which we've done over 60. And if you see these marked on the map, we really do have quite an extensive global reach. And Mexico is a very interesting market for us. It is actually the third trade mission in a row that we are organizing. And so after drawing on the success of the last two events, we decided to have a third. And also some of our upcoming Solarplaza events are shown now on the screen. Feel free to check our website at solarplaza.com if you would like to find more information. As I mentioned, this webinar is a prelude to the Solar Project Development and Finance Tour. And just to explain a little bit what this is about and why you might be interested to join such a trade mission, it's a 5-day trade mission for all kinds of stakeholders who are eager to either enter the Mexican market or expand their current operations there. So three of the main points that we see are most beneficial to our trade mission participants are A, that you have the opportunity to meet and network with a variety of stakeholders, including government stakeholders, investors, and financial experts, and a wide range of other industry leading experts. You will have the opportunity to learn about some of these issues from leading speakers and industry experts such as the ones who are speaking in this webinar. And you will also have the opportunity to share and discuss your opinions, and it will be the goal of the trade mission is to make it an interactive, no-nonsense, real look into the market, and in order to be able to establish what types of business models are most likely to be successful in this market. Currently confirmed, we have Jinko Solar as our diamond sponsor, so we'd very much like to thank their participation in this event. We have, as you can see, a number of content partners who will be participating in this trade mission. And current participants that we've confirmed include the companies that you see at the bottom of the screen right now. If you want more information about the program and speakers and other information, please feel free to check the website. So I don't want to take up any more of your time, and I'd like to actually start with our first speaker. Our first speaker is Pedro Elio. He is an advisor, as I mentioned, to ASOLMEX, the Association of Solar Project Developers in Mexico, as well as being the country manager of First Solar, and he brings over 14 years of experience in a variety of different fields, very relevant, and so has a very good overview of the market and the potential opportunities. And so today he will be giving a general overview of the Mexican market and the opportunities that he sees. And so without further ado, I'd like to pass on the role of presenter to Pedro. So if you're ready, Pedro, I will be passing on the screen to you.
Okay, thank you, Borja. And thanks everyone for being here. I will try and be brief in this participation in order to allow a little bit more time for questions, hopefully. I have a hard stop, unfortunately, at the end of the hour. I'd like to also thank Solarplaza for giving me the opportunity to speak in this webinar. And I would like to wish them success in their upcoming workshop, trade mission, and conference later this year in the month of March. I really think we need more of these types of events to spread an important message around, especially to local authorities like CENER, CFE, CRED, and large industrial consumers. And it's a message that I would ask you also to please spread around. You know, it benefits everyone in the solar industry. So whenever you have a chance, when you talk to someone at CENER, at CFE, CRED, and large industrials, please help everyone by spreading this message that I'm going to be giving today. The message is very simple. Solar prices have fallen sharply, very much so, in recent years and in recent months. And today, they are at very competitive prices. Public data will show that there are certain long-term PPAs, purchase power agreements, being signed at around $79 per megawatt hour in certain regions of Latin America. To be more precise, I would probably give range of prices. They have been between $79 and $123 per megawatt hour for PPAs with tenures of 15 to 30 years and indexed to different types of inflations. Very competitive, as you will see. Prices used to be as high as 350 as recent as 2 years ago in Europe. Nobody would have thought that we're seeing double-digit prices in Latin America only 2 years later. So I will show with hard data that in recent bid processes, licitaciones, and these aren't in faraway places, but close to home, close to Mexico. As you will see, these figures are for Central and for countries in Central and South America. Okay, let me take a small step back. Like Borja mentioned, my name is Pedro Elio. I am the country manager for First Solar in Mexico. But today, I'm speaking as a board member of the Mexican Association of Photovoltaic Solar Energy. In Spanish, la Asociación Mexicana de Energía Solar Fotovoltaica, o más fácil, la ASOLMEX. The information in these slides that you will see have been prepared by members of the association based on publicly available information. Just a few words about the association. We bring together operators, investors, suppliers, project developers of PV solar plants on a utility scale. So I invite you to visit us at the link that you see in your screen, and maybe hopefully you will want to join the association as well.
Pedro, sorry to interrupt you.
Yes.
Currently, we're still stuck on. Okay, now we just moved to a new slide. Sorry. Yeah, no, go ahead. Keep going. We're stuck on your initial slide. Thank you very much.
Yeah. No, I just wanted you to remember the link so that you can go ahead and visit us and get information from us there. The association currently has 28 members, and we are adding more members each month. Actually, almost every week, because we're a pretty new association. We have less than a year. Everything in solar is moving very fast, as you know. Here on this slide, you will see the companies that are currently members. As you can see, we have operators, as I said, equity funds, technology providers, project developers, and all of us here have one thing in common, which is solar PV on a utility scale in Mexico. Okay, so back to the message I want to pass today. This is a very powerful graph. Prices have fallen sharply and are today at competitive levels. It's amazing how fast prices have fallen. One would think that this graph comes from a high-tech sector, like cellulars or something like that. No one would have thought this is a graph from the energy sector. I've been working over 15 years in the energy sector. I've been 10 years with oil and gas companies like BP and Shell, some of them, and then some 5 years in commercial and development roles with natural gas combined cycle plants. And I've never seen a graph like this, with this kind of drop in prices. Well, actually, in commodities like oil and natural gas, we're all used to see variations that are even greater than these. But let's make an important distinction. Variations in fossil fuels, commodity prices are swings, again of 50%, even 100%, but they go in both directions. I remember when I started working in the oil industry, prices were at $10 per barrel at the wellhead. This is back in 1998, so 17 years ago. Gas prices in those times were also very low, less than $2 per MMBTU. But then we saw prices going up to 3, then to 4, then to 6, then to 8. That's 400% swing going up. I remember the intraday prices at $12 per MMBTU. And then, as you know, there was some unexpected disconnect between natural gas and oil. Oil kept going up while gas started to come down. And, now prices are coming down. But the million-dollar question is, how long are these prices going to keep at these levels? Nobody knows. Something you could find out is if you go to a trading desk and ask them, how much would it cost to get a financial hedge for, say, 20 years at these low gas prices? I bet the answer will be, sorry, the product just doesn't exist. Or it'll be, it's just too expensive. And why is that? Because likelihood is that the prices will go up again over such a long period. With solar energy, the customer gets a flat price for 20 years. That's it. That doesn't need to go and get sophisticated hedges and be renewing them and subject to oil or natural gas commodity prices. If anything, the price will vary by inflation if he wants to. Anyways, back to the main message. The thing is that prices of solar energy have dropped very much so worldwide over the last few years and even over the last few months. Okay, this slide shows that prices are competitive. These are public bids in year 2014, so just a few months ago. And as you can see, we're talking almost everywhere prices below $100, in the ranges of even $60 in some cases, like Emiratos Árabes. Or in Latin America, you see prices as low as 79 in countries like Panama. This slide is the same as the one before, but with a little bit more information at the bottom. It shows the scale. These are big projects. In other words, utility scale. And it shows the term of the contracts. These are long-term PPAs, 20 years, 25 years, 15 years. For projects, above normally 10 megawatts. These are the total bid that were given in these countries. In the case of Chile, you have two of them because they have different COD dates. And so, what is the recipe for these kind of prices? We don't need to reinvent the wheel. It's all about transparent bidding processes, clear rules, and mechanisms for long-term financing. There is no secret. Mexico and CFE in particular, they are actually pioneers in these kinds of contracts. There are many gigawatts of contracted power plants in Mexico. They're just not in solar yet. They're all natural gas combined cycles in the vast majority, and some of them are wind. So in my opinion, I think it's just a matter of time. I'm very excited to be in this industry in Mexico. It's simply just a matter of time. We need to pass this message as much as we can. Prices in Latin America, close to home, are being contracted at levels in the double digits. So no more the $350 prices that some of us maybe that we're not working in this industry or so familiar, we're still stuck in our mind. Now we're talking about double digits. It's less than $100 in many cases. And that's the message, really. So, in conclusion, I would just repeat myself over and over. The price of solar energy on a utility scale has dropped significantly in recent years and in recent months. Today we are seeing competitive prices. 2014 recent experience in countries of the region shows that long-term contracts and utility scale are available at very competitive prices. We don't even need to mention other great additional benefits of the naturals, of the solar energy. Naturally, besides the fact that it's clean and renewable, don't need to be burning fossil fuels. Fixed prices, like we mentioned, we forget volatility of oil and natural gas. You just fixed price flat for 15, 20, or 25 years, how long you want the PPA to be. In terms of location, Mexico has an incredible irradiation in most of the territory. So you can be placing, say, 20, 30, 50 megawatt solar plants next to each place that the Mexican grid has a congestion issue, and help solve congestion instead of investing in long transmission lines. So you can do that for 20 times over, and the system will benefit incredibly. Something like a macro distributed generation thing, where you put the generation in the place that you need it. You don't have to be looking for a place that has availability of natural gas and availability of abundant water, and it's just sun and transmission, pretty much. The diversification of the energy matrix that solar brings is another great benefit. We're getting rid of some fuel oil in Mexico. That's great. We're bringing more natural gas. That's also very good. We have quite a bit of wind already. That's awesome. We have some hydro, and now I think it's natural time for solar to start to be playing a bigger role. Solar plants have a very high plant availability, and I've been in natural gas combined cycles, and there's a lot of parts that are moving all the time. In natural gas, it's just a panel. Very few parts are moving, if you have trackers only. Anyway, just want to end it here. Prices have dropped significantly globally for solar energy. We are seeing now competitive levels, and I have no doubt that Mexico will benefit from this in the short term. So thank you, and I can now pass the microphone back to Borja. Hello, Borja?
Sorry for a small technical issue there. Thank you very much, Pedro, for your presentation. It was very interesting. I think a very clear message that you portrayed. I think from a financial standpoint, it is an industry, it's part of the energy sector that makes sense. And it's also very interesting to see a lot of professionals like yourself coming from the oil and gas and other energy sectors into solar. So thank you very much. And I'd like to move on to our next speaker, who is, excuse me, yes, our next speaker is Marco Antonio Vasquez. As I mentioned previously, he's an energy specialist with Baker & McKenzie, with over 14 years of consulting experience in the Mexican energy sector in both private and public roles. So he has a very good understanding of the market, and he's going to present to us some of the, from a legal perspective, what the opportunities are in the market. So I will make you a presenter now, Marco.
Is that okay, Borja?
Yes, perfect. We can see you very well. Thank you, Marco. I'll pass the microphone to you.
Thank you for the invitation. I would like to thank Solarplaza for the kind invitation. This is very important for the Mexicans, from the Mexican side, in order to promote what are the specific strategies and implementation activities in the energy reform, specifically for the power sector, which is the most complex in order to attend all the difference and all the new industries or sub-industries that is implementing in this process. I would like to start with the first slides, which is this is the agenda for my presentation. But I would like to start how was the power industry before the energy reform. As we know, the generation is almost a monopoly for the CFE, the Federal Electricity Commission, which was in charge of the public service, including the generation in this point. After that, CFE was also a power importation agent, and also the independent power producers, that's out of the public service, but this with a permit from the from the CRE are allowance to produce energy and other products. Another one is the production, the small production and independent power producers. And the last one, in the context of CFE control for transmission, distribution, and supply, in order to supply the power energy for the final users, is the self-supplied in remote context, which is also produced by private parties. And the cogeneration and importation was another schemes in the public law for the electric power in the last legislation, and it would share between CFE and private parties in that schemes for operative control, most if the self-supply is for locally supply. But in transmission and distribution, the private parties could participate for in limit aspects. Now, the power industry, the main change is that Each activity is separate in order to get more competitive prices and more competitive actors. In this context, the CFE generation, I mean CFE, the new state productive company, according to the power industry law, is a company which the state is the owner. But in this context, most of the administrative activities like budget, like efficiency in operational activities, are not anymore by state control. That's the main difference. And another one is that CFE would create a subsidiary or affiliate productive company, and the same scheme for state productive companies would be in this context. The independent power producers are working right now in a specific context in the power industry law, like external legacy plants, and the small production also. But the main change here is that the SENACE, which is the National Energy Control Center, is now independent, totally independent from the CFE. It's a decentralized body for the federal public administration and is in charge for the operative control in the power market. And another one is the self-supply prior to the power industry law, which is a specific in charge of the mandatory transitory regime, but also a new scheme that I think that is could be the most important opportunity for photovoltaic power is the isolated power supply. Why? Because the most competitive opportunity that the photovoltaic power energy could take in account in this context is the capacity to promote for any capacity for each power plant could be the best opportunity for that in this context. We need to see that in this scheme is not the clean energy certificates. I think that the isolated power supply could be, without the speaking in the clean energy certificates, could be the best opportunity for that context. Also in this new power industry, the CFE is in charge for the transmission and could share by contracts with private parties. The distribution is also another activity for the exclusive owner in the state, but can share by contracts in specific schemes the participation of private parties. And the supply could be mainly for CFE generation, for independent power producers, small production and power imports could be supplied by CFE. It means that the CFE generation should not the same CFE in transmission and the same CFE in distribution and obviously in supply. It is an important change in the Federal Electricity Commission because it means that many CFEs will be working for each specific area. And another one, the possibility to supply by private parties, mainly for power generation as a unique permit now, since the last August, and the self-supply prior to the power industry law, and obviously the isolated power supply is not considered a generation. It's for that reason that is in separate way for all the change of activities. In this moment, how we see the market operation, mainly for the CLE, which is for the CELs, which is the main economic scheme for incentive the renewable energy. I would like to say here that in the power industry law, the clean energy is not only for all the renewable energy, as we know, which is including hydro and nuclear power. It could be a very important point for discussing the next seminar, I think. In the supply side, how is operating, or how could be or should be operating the power plants? The power plants should be working by a generator or by supply the power by a power marketer. The holders of CLEs, which is the main economic instrument for clean energy, should be also traded by a power marketer in order to put in the market all the clean energy certificates. And another one is the basic supplies services supplier and the exempt generation, which is only for a power plant's capacity less than 5 kilowatts. That power plants will not require a generation permit. And in the market, obviously, is the wholesale market. And after that, what are the specific products and services that would be traded in the market? Not only the wholesale, is including also all the activities like power capacity, ancillary services, and clean energy certificates. And for the demand side, how is the organization that we see is for qualified service suppliers. Another figure that is implementing right now by the mandatory power industry law is the last resource suppliers, which is for specific activities, and the basic services supplier, which is in charge. If you can see, the basic services supply is in the supply side, but also in the demand side, because it's attending since the supply side to the demand side for basic supply users, perhaps. And the last one is the the last thing in the demand side are the final users. Okay. In this context, how is right now the implementing energy reform in the market? The SENACE's creation that was in October by a decree of creation published by the Ministry of Energy in the Federal Official Gazette. And another one is that a very important activity for the power industry, which is the contract model that will be published by the CRE, the Energy Regulatory Commission, in the next May, according to the authorities' presentation. And the power market operation would be into operation by at the end of this year. After that, the first market rules. The market rules are based on the administrative regulations published that will be published by the CRE, and the operative regulation that would be published by the SENACE, which is the National Energy Control Center. But the first market rules, according to the regulatory regulations of power industry law, and according to the transitory regime, the first market rule should be published by the Ministry of Energy, and they are expecting that in the next July could be ready and published in the Federal Official Gazette. The next market rules or modification or amendments to that market rules would be not necessary to publish in the Federal Official Gazette. In the transmission and distribution, the regulate rates for transmission and distribution would be published by the CRE. They are expecting at the end of August. the National Electric System Development Program, which is the most important program for transmission and distribution. The Ministry of Energy is the responsible for that program, but obviously would be integrated by many aspects and consideration from the CRE and the SENACE, since the main activities are in operation. The power industry. The regulation of the power industry law was also published the last, I think it's the last October 31. Is mandatory right now, the regulations of the power industry law. And after that, the terms of separation of the CFE, as I mentioned, that the CFE will not a unique company anymore, will be split into many specific companies according to the CFE law. And that terms of separation would be published also by the Ministry of Energy, and it would be one of the most important things for the power industry operation, including the renewable energy and the clean energy aspects for many specific, according to Pablo was mentioned in his presentation. And the last one is the clean energy. The guidelines on clean energy was also published the same date of the regulation of the power industry law. That guidelines was mandatory since this month. And the clean energy requirements in the first 3 months of this year, the Ministry of Energy will publish the requirements, the specific requirements for each energy consumers in the demand side. Also the auctions for basic supply, which is a specific opportunity mainly for the CFE, which will be the main supplier for that supply. And the request for interconnection, this is a very important activity for the SENACE, not only for the implications in the transmission and distribution grid, but the administrative process that the SENACE are implementing for requests for interconnection was followed by the CFE according to the last specific activities that was in charge of the CFE. Right now, the SENACE is the responsible of that activities, and that transition is a very important challenge for the SENACE and for the implication on the transmission and distribution network. Also, is not necessary an implication for the photovoltaic energy. The geothermal round 0 for CFE, according to the geothermal energy law, and the round 1 that could be expect the bidding process for next July. And last, in this brief presentation, the two main challenge and opportunities for solar energy. I think that the regulatory mechanisms of incentives for photovoltaic, like energy bank, power wheeling postal stamp, and self-supply, should be the leverage, the competitive. Sorry for a mistake here in the presentation. And the solar photovoltaic should leverage the competitive advantage over the next clean energy technologies. I think that is the most important thing. As Pedro said in his presentation, the price is not a barrier anymore, and I think that the capacity for the photovoltaic technologies to split all the requirements for specific suppliers and users could be the most important in the isolated power supply for that new regulatory framework. Thank you.
Thank you very much for your presentation, Marco. This is a very interesting overview. I know that it's a lot that you're covering in just 15 minutes. I'm very much looking forward to continuing to learn more from you during the legal workshop, which we will be holding as part of the trade mission at your offices. So that's something I definitely look forward to learning more about and seeing the progress of the energy reform by March when the event is happening. So thank you very much. I'm not sure now. I know that Pedro had mentioned that he has a very important hard stop. I don't know if you can hear me now, Pedro, but would it be possible to quickly go through your so just ask you 2 questions before we move on to Stefan?
Yes.
Perfect, thank you. So I have a question from Eduardo. And he's asking, what is the average installed cost for utility-scale solar in Latin America, or more specifically Mexico?
It's a good question. It'll vary significantly project by project, depending on technologies. What I would suggest is that you contact the supplier firms for a simple indicative quote. Feel free to call First Solar or any of the other suppliers. Right now, I couldn't provide a figure.
Thank you very much for your answer, Pedro. I have one other question from Viola, and she'd like to know how macro-distributed generation can help to solve the congestion and the bottlenecks that we find in this market.
Oh, sure. So simply, if you have a lot of generation being sent from a very large plant in one place, and you only have restricted transmission capacity to a smaller location, and that transmission gets congested because it's going to major load centers. What you can do is just place a solar plant right next to where you need it, and since there is a high energy resources pretty much throughout the whole country, then that means that it's very likely that a specific load center will be eligible for a utility scale plant. And it is a concept that works for right now for small small consumers. The thing is to scale this back to utility scale and place 10 megawatt, 20 megawatt plants near places that are at the end of the transmission lines where there are no gas pipelines or no wind, no water. So it's basically helping the system to generate electricity on more counterflows than going with the flow.
Thanks very much for your answers, Pedro. There's a series more questions for you, but unfortunately, because as we're going a little bit over schedule, it's difficult to discuss all these topics in such a short period of time. Again, we will continue these conversations during the event itself, and we can follow up with more questions. But I would like to now move on to our third and final speaker, which is Stefan Bloom. So Stefan, I will be passing the role of presenter to you. So you should now receive the invitation.
I have. Unmuted.
Hello, Stefan. Thank you very much. Yes, we can hear you and we can see your screen. So please go ahead. Thank you very much.
Great. Yeah, thanks Solarplaza for inviting me. Thanks everybody for being here. My name is Stefan Blum. I'm the representative of KfW DG, German Development Bank. And I'll just show you 2 or 3 slides quickly because I guess not everyone is familiar with DG. DG is over 50 years old, based in Cologne. and we have a portfolio of loans and equity participations of about 7 billion euros. We're part of KfW, which is the German State's Development Bank, well rated, pretty big. And we as DG are actually quite a small part of this. So I will also show you there's 3 subsidiaries of KfW based in Mexico with offices. And as sometimes people get confused, I wanted to take just a few seconds to show you. To the left, we have KfW Development Bank. They are involved in the public sector in Mexico. So they finance, let's say, renewable energy indirectly through NAFIN, through Bancomex, through NetBank. To the right here, we have KfW IPEX, which is KfW's export finance bank. So they could also finance renewables, but there always has to be some German or European content, and they are only in loans. And finally, DEG, my organization, we don't need any German or European link, so we can finance 100% Mexican or 100% third country projects. And besides providing loans, long-term loans, we can also provide equity. And this is in the next share. Basically, we have 3 products. We are always involved in long-term financing. The ranges you can see here are about $10 to $50 million. We can also provide Mexican pesos. And long-term for us means 4 to, well, up to 20 years, basically. Our comparative advantage is definitely being in the long term. But at the same time, we can also provide equity, similar amounts. We only take minorities, and we're pretty flexible when it comes to exits because we don't have any very specific life of our loans. And then in the middle here, you see mezzanine, which is basically hybrids between equity and long-term loans, and that can also be relevant for solar and renewable energy projects. So now I would like to turn to Mexico. We as DG have had an office in Mexico for over 10 years. We've been active in the country for over 40 years. So we have seen quite a bit of what Mexico has been through. I wanted to quickly touch upon something which especially Pedro has already mentioned, which is that we also see a very positive contribution of solar to the Mexican energy market. Diversification away from thermal, but within renewables, we can also see that there's mainly large hydros and wind in Mexico. So I think diversification in general is a positive thing. The transmission, yeah, I think Pedro has already touched upon that. In wind, we see a major transmission problem, for example, in Oaxaca. So solar, you can basically put wherever, as Pedro said, and that obviously alleviates transmission issues. Synchronization of supply and demand, because solar produces in the daylight, I think is very, very attractive, especially for regions like Monterrey, where you need a lot of daylight energy because of air conditioning, etc. And finally, I think being kind of an addition to what we see so far in Mexico, solar can make more attractive package offerings. And we have seen some companies in Mexico, comercializadores, that basically draw from different sources of energy, and I think that is indeed a very interesting offer. Distributed generation, I just wanted to touch upon because I think it's a good business case. There is the so-called DAC tariff in Mexico, which is very expensive for let's say larger residential houses, etc. And there's definitely a very strong, I think, rationale for switching to solar. It's happening, but I think what we see so far is that it's mainly individual projects, and we don't really have seen, probably due to the higher transaction costs, etc., some regulatory issues. We haven't really seen larger sponsors that are involved in many of those projects. So let me now turn to utility scale, where I think our focus is here, and start with merchant formats. I think most developers in the last years have followed this so-called small producer model. This model, from my perspective, and I think most developers have actually recently turned away a little bit from it, has several issues. First of all, the volatility, but I think volatility per se is acceptable. What we have seen is that prices have come down from last year onwards, basically. And from my perspective, the main problem with this is that the formula and the way of calculating it is not very transparent. So that is also something that I think recently has been put very, very much to the front, and people have also turned away from this model because of the intransparency. So now, as Marco had said, I think the kind of successor model for merchant is the wholesale energy market, and they're basically designing it. And I think Marco said that in the second half of 2015 it will start operating. From my perspective, and I think from a financing perspective, I wouldn't expect this to be a major issue at least until next year, because I think even if it starts operating this year, kind of financiers will want to see how it operates, how well it operates. There's conflicts that may come up, and I think therefore it will definitely be, let's say, at least another year until that is a viable option. From my perspective, and Marco has mentioned the clean energy certificates, while I think there's a lot of hope for these certificates to make renewable energy more attractive, and specifically solar more attractive, I am seeing a little bit other experiences that we see with these certificates worldwide. I would have my doubts, and therefore I think that is definitely something that solar, being at the moment at least one of the more expensive renewable energies, will have at the moment at least a disadvantage with. Another issue I see is regulatory and especially psychological insecurity. Psychological because the government has been very strong to say that energy prices will come down, and I think that is one of the reasons why we see people sometimes being hesitant to sign long-term PPAs. And in general, I think it's kind of a moment where there's a transformation going on, and people are sometimes hesitant to commit long term. The main issue, and this is related to this insecurity, is that at the moment we don't see a lot of really bankable PPAs in the solar sector in Mexico. And this is what you see down here. I think at the moment, especially compared to other renewables such as wind in Oaxaca, such as hydros, solar is not yet fully competitive. We expect, and I agree with other observers, We expect prices to go down further in the coming years, but at the moment I think that's what we see from a financing perspective for solar. So basically, because we don't really have a lot of time, I have 2 more slides which I would like to go through quickly, and this is the first slide on debt financing. What you see as debt financing sources in Mexico are basically all types of banks that you could imagine, from commercial to development banks, local banks, international banks. You have a number of niche banks like NetBank, which is very attractive for projects in northern Mexico. And what you will need to consider when talking and choosing a bank to finance that is that, first of all, they will usually want to get started on a project at the ready-to-build stage. So before that, it's going to be mainly equity. The bankable PPA, as I said, is the most important factor. And at the same time, a bankable PPA for solar in Mexico is definitely the main bottleneck for debt financing. So I don't have time to go into details, but obviously the quality of the off-taker, the price, the way of calculating the price, which means it can be kind of fixed prices, it can be prices that are calculated in relation to CFE, etc., is a main issue. Tenor, the longer the better, clearly, and cancellation rights for the off-taker is also an important point. Now, if you manage to get like a PPA for 20 years or so, so really long-term, that's quite naturally the domain of development banks, and that's where we will be, as development banks, most attractive. Another issue is the currency. When it comes to US dollar PPAs, you will have more foreign banks competing, especially the Japanese banks are very interested in long-term dollar contracts, while if it's a peso PPA, it will naturally be more the local commercial and development banks. Risk mitigation factors are first-tier modules, EPC turnkey, etc. I think in solar this is not as important as, let's say, in wind, but at the same time it helps to make projects more attractive to banks. And finally, the debt sizing is done differently, but from what I've seen, what one should expect is equity ratios of about 30 to 40%. For very good projects, it can also sometimes go below that. And then the next slide is on equity financing options. The possible sources are very broad. Most projects in early stages are basically financed by family and friends. Of course, you have strategic investors like utilities, like off-takers, etc. You have private equity funds, which are increasingly interested in entering the sector. What we see more is specialized kind of energy funds, and I think they are much better suited to finance these kinds of projects, because normal private equity funds don't really have the design and the track record to do that. You have institutional investors, especially the local pension funds, Afores, have recently grown a lot and have a lot of appetite. Some banks have equity operations like DEG, and then a relatively new phenomenon are the so-called yieldcos. So they're basically listed vehicles. Sun Edison, for example, has a yieldco called Terraform, which has been quite aggressive, and I think it's a very interesting source of financing. The issues to consider is the moment of investing, because at different stages of a project, one has different financiers being interested in a project. So, for example, a yieldco will only come into projects that are already operating and that have very stable cash flows. A related issue is the time horizon and the exit. I think for somebody developing a project, it's very important to understand what the exit is and at what time, what moment one exits. And I think most players will favor longer-term view. So if a developer stays in during construction and then also during operation, that is definitely, I think, a very very strong argument for an investor. Corporate governance is always an issue, and we as a development bank, for example, very much focus on a clean corporate governance. Size is very important. We see that the bigger projects are, and even better if you have a portfolio of different projects where you can diversify risk. That's also more attractive. Something to consider is mezzanine. Instead of straight equity, mezzanine can always increase your returns, and is always an interesting thing to consider. Sometimes there's government funds. And finally, just a comment on international investors in the equity. These will definitely prefer US dollar risk. So that is something that one has to take into account. And if you kind of boil that down, we find that the more advanced, the more sizable, and the more institutionalized the project is, the easier it is to obtain equity. So this is basically, I think, my main view on the Mexican solar sector and financing opportunities. I have a couple of more slides showing a little bit the structures. This is an example of a debt structure. I won't go into details. You can look at those later. This would be an example of an equity structure. And then I have to close a few slides on DEG, what we have done so far. Here you see that in Mexico we have done mainly wind projects so far. We have done a lot of solar in Central America and South America and Africa. But in Mexico, to be honest, we really haven't found a project which is financeable either on the equity or on the debt side. But we're currently looking at a number of them, and we hope to close something this year. And then another slide on investment focus. I won't go into that, and on why it would be attractive to work with DEG. Actually, there's one more. We also have a number of kind of soft funds, which are funds by the German government or other governments. And we can also contribute those to the project. So they're basically donations. So as we have been somewhat restricted on time, I put my contact here, and I'm very happy to continue whatever discussion or answer any questions you may have via email. Thanks a lot.
Thank you very much, Stefan. That was a very insightful presentation. I know that I enjoyed it very much. I hope that the rest of the attendees also enjoyed it. We have gone over time, but I would like to ask you a quick question. We have a question actually from Chris, and something that I know a lot of people are wondering. In your opinion, what is your opinion on sort of private equity funds stepping into the solar industry? Do you think this will happen? What are your perspectives on private equity funds entering?
Yeah. DEG we're a member of Amex Cup, which is the private equity association, and we have a lot of relationship and experience with private equity funds. We believe that we are a very good complement to private equity funds in investing because they are more hands-on and involved in the day-to-day business, while we are more passive investors focusing, let's say, more on issues such as environmental and social topics or corporate governance, and so we in general we very much like the development of private equity in Mexico, and we see it growing a lot, and I think private equity plays a very important role in Mexico, especially because there's a lot of family enterprises and so on. Now, if we're talking about renewable and solar in particular, I think it's not easy to kind of match private equity with those kinds of projects. And the main issue, I think, is tenor, is kind of the time frame that these projects have. I think anything below 10 years is rather uncommon, and usually you will have projects which are, let's say, running for 15, 20 years. The usual private equity fund is probably running for 7 to 10 years, and if you don't invest, let's say, at the very initial moment where the equity fund takes off, you probably have 5 to 7 years time frame, and until that time is over, the private equity fund basically needs to get the return. So this is really something which is not easy to match with the specific situation of renewable and especially solar energy in Mexico. And therefore, I think in general it's going to be a challenge for private equity funds to enter. Now, if you have very, let's say, specialized sector funds, renewable energy funds, there are some of those. They tend to be, first of all, they know the issue, and they tend to try to get around them. They have a lot of track record, so that definitely helps. They don't usually run for 15 or 20 years because no investor basically is willing to wait for such a long time to get their money back. But there are some other ways to get around. So, for example, such a fund will probably try to build a portfolio of projects and kind of aggregate projects, contribute their experience, make it bigger, make it therefore more attractive to potential buyers, and then within their time frame of 5 to 7, sometimes 10 years, they will try to sell that portfolio to strategic buyers, to pension funds, etc. So I think private equity funds can play a role, especially in the more risky phases of development, of construction. But one has to always keep in mind that the time frame is a major issue here.
Thank you very much for a very detailed answer. I appreciate that very much. We have sort of run out of time and gone over, but I would like to pose one question to Marco. If you're still available, Marco, I would like to, I have a question for you. I have a question here from James, and he's asking, what are the key issues and practical constraints to look out for in individual projects that are under development? Can you hear me, Marco?
Thank you,
okay, yes, thank you.
Borja. Yeah, thank you. I think that with this structural change in the regulatory framework, we can't say we need to wait to the operation in the power market, because in this moment many administrative dispositions from the CRE are not available. For example, the contract models, which is one of the most important dispositions from the CRE. I think that the main challenge for the photovoltaic energy, considering the economic aspect that just mentioned Simon, is the finance access, but also the capacity to penetrate into the psychological mind in the final users. I think that could be not the more consistent conclusion if I said any barriers or restriction in this moment, because the regulatory framework is not ready yet. I think that we need to wait at least at the end of this year or the next one, until we say with all the certainty what are the specific and practical restrictions, because all the schemes for incentives for renewable energy are not working anymore. So in this new context, I think that we need to see we take a look in the clean energy certificates, for example, but the isolated supply scheme without clean energy certificates, I think that most of the times could be the best option for the photovoltaic energy.
Sorry, I was muted there for a second. Thank you very much, Marco, for your detailed answer. Unfortunately, we have really run out of time now, and we will no longer be able to take any further questions. There are a lot of unanswered questions. Again, feel free, if other questions have come up that you haven't had a chance, feel free to email me personally. My email is available here, and I'd be happy to pass on information. Again, the slides and recording of this webinar will be made available to you, so we will be in contact with all the attendees who are here today. Pedro already had to leave us as he had a hard stop, but Marco and Stefan, I would like to thank you both for your participation and interesting discussion and views that you've given us. I very much look forward to continuing these conversations and exploring some more of the issues in March. And hopefully also by March we will have a little bit more clarity on certain issues. I think one of the take-backs that's very clear from this is that it's a very interesting market, but there are still a lot of undetermined factors. So for all of you that are looking to expand your operations in Mexico, I would definitely recommend for you, if you'd like to look at the website, and feel free to get in contact with me if you'd like to know more about this event in Mexico, and if you'd like to join or learn about other opportunities to be involved further. I'll leave now with just a closing screen with other events as well if you're interested in finding out more. But once again, thank you very much, Marco and Stefan, and as well Pedro, who is not here. Your contribution is very much valued, and I hope that all the attendees enjoyed this as much as I did. And I look forward to seeing both of you in Mexico. And again, I hope that some of the attendees of the webcast today will be interested to come with us and learn more.
Thanks a lot.
Thank you, Stefan, and thank you, Marco. And with that, I will now close the webinar, and I look forward to being in contact with all of you shortly.